Oh, hi. More new apartment developments are opening up, beginning lease up this year than we've seen since 1991. That's going to lead to more sales in this market, which we've already seen. We've seen about a dozen sales of new properties that have been completed in the last couple of years already this year. Just in the last couple of months, we've seen a number of these new properties sell. These were all built in the last year or so. The Slate sold recently, Nova. We also saw the sale of the Alto and Collage. These are just 4 sales, properties just completed in the past year that all sold this summer. So what does this mean for investors? Why does this matter? Well, more new construction in the market selling will change sale price statistics. Renting will change rent information. So let's just take a look at what this impact means to investors and how we really need to think about some of these trends going forward, because it is a significant amount of new development taking place. If you look at the average rent in King County of what I'm calling older properties, these are properties built before 2000, and compare that to the rent in newer properties built in the last dozen years, you can see that the newer properties rent for about 60% more. And the newer the property, most likely the greater that spread will be. So properties just built in the last couple of years should probably see an even higher spread on their rents. So what that means going forward is when you see rent trends and the rate of rent increase, you do have to factor in that some of that increase is simply caused by the inclusion of a very significant number of new units in the market. Then you can also look at sales trends. As I mentioned, there have already been a number of sales of newer properties this year, and newer properties, again, generally speaking, sell for quite a bit more than older properties. This shows the trends over the last dozen years for properties built since 2000 compared to properties built before 2000. And you can see that the newer properties are selling for almost twice as much, well, actually 85% more than the older properties. And again, this trend will get magnified by the newest product that's coming into the market, most likely. And so sale price trends also will show a distortion or an inflation caused by the addition of probably a lot of new products selling, more new products selling than we've seen in a long time, simply because more new product is hitting the market this year and next year and on into 2015. It also impacts operating costs. When you look at operating cost trends, even though newer properties are new, so their stuff isn't wearing out, their operating costs are higher. The real estate taxes are going to be higher. Probably their management costs are higher, and they have a lot of higher end finishes, which is going to just increase the maintenance cost on those items. And what we've seen here is that the newer product last year had operating costs that were about 30% above the older product in the market. So the bottom line for all of this is we're going to see basically a rent, price, and operating cost inflation over the next couple of years, in part caused by normal market trends, but part of that is going to be caused simply by the inclusion of all these new units. That's not a bad thing. We're just saying that you're going to have to discount a little bit for that and make some adjustments. Anyway, there's more information in our article. The article is called Beware the Skew of the New on our website at www.duprescott.com. I hope that you enjoyed this week's update, and you'll come back next week for another weekly apartment update.